Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, it's been quite a busy week, not just for the Nasdaq-100, but we're also going to take a look at what's happening with yields, which have really been the story for the week and how that's impacting indexes like the Nasdaq-100. We also have the FOMC minute. So quite a lot for traders to digest.
Yeah, it's certainly been an action-packed week. Even the last few weeks since the June FOMC back on the 16th, but more recently, last Friday, last week we had the monthly payroll data came out, which was a little weaker than expected, and then this week we had some ISM data, which was also weaker. And then, as you noted, yesterday's Fed minutes were out, and it just affirmation that the Fed is now talking about potentially some tapering of the bond purchase program. They haven't yet given a timeline, but expectations now for that rate hike are, I think, moving up towards the early part of 2023, maybe about 18 months out or so. You would expect that the tapering would be complete before the Fed then moves on to raise rates. So I think the market is really just digesting, what that impact would be on inflation and things like that. And so we're seeing that rotation continue to go, underneath the hood of the market.
All right, let's pull up your Bloomberg here. We got a number of charts to take a look at. Let's start with the Nasdaq-100, then we can move into the 10-year just to show how they are so joined at the hip, it seems.
Yeah, so this here is a 30-minute period chart over the last month or so. I'll zoom into this week's price action. We can see that today was when we had the significant gap down, which we haven't really seen for quite some time. The index gap down about 1.5%. It's rallied back from most of those losses intraday basis, but we can see it still hasn't yet filled the gap, which is up around 14,810. So about 100 points or so away from that. That's going to be the key level to that traders will be looking to trade against over the near term. Again, we're within 1.5 to 2% of the all-time highs, which were just made yesterday. So I don't want to get too bearish here. But we are seeing, much bigger or greater weakness, in the other benchmarks like the S&P, especially the small caps, the Russell 2000, the Russell Micro Cap Index. They're off about 6-7% from their highs. But value is still continuing to underperform versus growth, and so that on a relative basis is very good for the Nasdaq-100. On the daily period here, you can see, yesterday, as we noted, we opened up at the high of the session, which was a 52-week high, and we gapped lower today. We're trying to gain that back here, but that gap level that we just highlighted is going to be something that's key to trade off of. The weekly period chart, we can see here, it's setting up for a doji pattern, which after this uptrend, doji can certainly denote a change of character in the market. So we'll see how tomorrow plays out. And then if there's any downside follow through next week. But if we hold around here, this potentially looks like a topping pattern. Now, that is, a relative, statement for me to make. We do have a bullish breakout here. Any weakness I would expect from here, maybe we retest the prior high, which is around that 14,000 level, which is only about 4 or 5%. So, nothing too drastic. But I would just also note the semiconductor index, which last week we highlighted was breaking out to new highs, has now given that up and dipped down below the prior resistance line around 3270. So definitely some things to keep in mind with the NDX. It certainly looks good on a relative basis, even on an absolute basis, but I wouldn't be surprised if in the near term, we do continue to see some downside and maybe a retest of that 14,050 level.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.